Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Good to see you all. All right, so quick pit stop at the economic calendar here just for a moment, just to remind everybody that today, Wednesday, we've got crude oil inventories. Again, a weekly number that we can look for potential day trades on. If you're a fan of intraday trading, crude oil futures, micro crude oil futures, the USO crude oil ETF, there is a unique opportunity where when that data comes out, one of the things that we'll do is we'll look for the volatility in time because it is a hot zone. It is an economic release. We'll look for that volatility in time fade. We'll be doing that together live in the Sector Secrets room. If that's something that you do look for, hot zones and the volatility, remember, we have that crude oil inventories report today, 10:30 Eastern. Other than that, it's pretty quiet. We've got the 10-year bond auction, which means ZN, the IEF and the ZN could have a similar opportunity. We're looking for continued downside in the 10-year. Yeah, the 10-year had a day, but like I like to remind the traders, if we've got a trend, if we've got dominant red grab candles and a path of least resistance, one day up, it's just a day up. It's not always going to be something that is a needle mover, a game changer, a trend breaker. Sometimes downtrends are going to have an up day or two. Not all of them are going to manifest into the kind of end of month, just face ripper rally that we saw in the indices. Some of there's going to be just a quick move. So we can see already ZN and ZB, your 10-year and your 30. You can see that already taken back the move from yesterday. Let's see if I can get that ZB up. There we go. Taking back that move higher from yesterday, almost better than half of the move. And the last thing with the calendar, gang, is remember tomorrow we have ECB. Friday we have the CPI. Why is the CPI a big deal? Probably for the U.S. Data set. This is the most important, probably even more so than whatever it is that Yellen said or did yesterday to rally the market as it was testing the lower end of the range on the indices. But that's going to be a big one because that's actually data that can map to whatever it is the Federal Reserve wants to use to justify their next leg of monetary policy messaging, their next leg of actual action. So we'll keep an eye on that inflation number for Friday. All right. But as always, gang, this show is about your questions. So let's go ahead and dive into those. And kicking it off with R8. Good morning. Thoughts on Merck? Sure. Oh, gosh, you know what? We're actually on healthcare right now. So perfectly timed question. Trading is all of that timing. Very nice. All right. So what do we have on the XLV and what's the story with Merck? We really want to start at that broader group, the sector level, the tide level. And healthcare is not in a downtrend at the moment, but the trend that preceded where we are right now in CHOP is definitely going to favor more downside. However, because Merck is part of this group and there is the potential that Merck's going to succumb to some more weakness if XLV does, if there are buys to be had within XLV, all right, Merck's one of them. I would put Lilly in that same category. Maybe Pfizer, maybe Danaher. It's going to take a little bit more time to get some clarity, but Merck and Lilly would definitely be part of that narrative of if we can buy the dip, if there are going to be some boats that can sort of motor out of this choppy, if not downward tide, that would be the focus. And that's how we find leadership. That's how we find the outperformers at the stock level, but within relatively speaking, right, within the sector. What's the word relative mean in this context? What are the stocks that are weighted within the XLV? So yeah, good eye, R8. And I would say I sure don't want to short it. And if healthcare does take off, if healthcare does strengthen, look, as much as I am a bear in this current environment, uh, because I'm relying on and respecting the trend that was, if we do take off, it's those relative performers like Merck that are just going to rocket higher because they're all ready to run and they're already able to sort of motor against that outgoing tide. Imagine if they're not having to, right? That's the way these things will typically react. All right, good stuff. Thanks, R8. Hey there, Nancy. Good morning. Can I take a look at CVX? Sure. You know what? Let's just stick with the multi-charts, if it's cool with everybody. Taking a look at XLE. This is the group, Nancy and everybody, that CVX is a part of. It's the number 2 weighted name, as you can see here. Now, being the number 2 weighted name, what that means is its influence over the XLE and XLE's influence over it is the tightest. Because in terms of weighting, these two are it. I mean, you're really looking at Exxon and Chevron as being the bulk of what XLE actually is. Everything else is practically fairy dusting in terms of weighting. Having said that, Nancy, I love where crude oil is heading. It's really just organized into an uptrend again. RBOB has been strong. Your energy sectors are solid. They're the best uptrends in this market right now. Oil stocks, oil, energy. I need a dip, though. I need a dip. So any of the, I mean, gosh, what's not to like? Chances are a dip is going to come at the boat level, not the tide. It's going to happen in an individual stock and not at the broader sector or tide level. So I'm not looking for an ETF XLE pullback. I'm looking maybe at Chevron, as you mentioned. PXD could be another interesting one. Devon at the 13 or the 21 propulsion. Even Occidental. Keep an eye on some of those stocks that don't have as much a chasm between where price is now and those buyable dip levels. So I like the buy the dip. I'm just not going to buy it as it's moving higher. I need a little bit of weakness. All right. So next up, enjoyed your free video. Oh, thank you. I do appreciate that. Thank you so much. So again, by the way, I mean, you're on the Simpler Trading YouTube channel or you're maybe on my YouTube channel, but on the Simpler Trading YouTube channel, we put out free content. All of us are the different traders here at Simpler. We put out free content every evening, 2 to 3 free videos every evening. Every Tuesday and Thursday, I have a free video. And yesterday's video, you know, in terms of what I would like to definitely make available to everybody, you know, frankly, whether they're a member here at Simpler or a member of any of the rooms that I'm in or not, which is how are we dealing with what's happening in this environment right now, which isn't just the fact that there's concern about the upcoming rate hikes, but also, you know, the concern of, say, low volume in summer. But we are just stuck. Let's see, 1, 2, 3, 4, 5, 6, and this could be the 7th day that we are just stuck within either narrow Darvis boxes or the wave. And if we have this kind of compressed, consolidating, this kind of squeezing of the price action that's going on, yes, eventually we're going to have a momentum break. My expectations are for a continuation of the trend that preceded the sideways action. But what do we do in the meanwhile? Well, I talk about that in the video, and I talk about what my typical go-to is in this environment, and also, you know, this season in trading, meaning summer. I appreciate that. Thank you. Very kind of you. And thanks for watching it. And if y'all haven't checked out the free content over at the channel, check it out. It's really good stuff. Hey there, Yee. How are you? IEF. So trailing stop there. This is a nice win. It's on its way anyway for us. Now, where we enter a market matters, right? So a lot of traders asked me yesterday in the various rooms, all right, Rog, what is this move in bonds, 10-year, 30-year, the ETF alternatives? What does it mean? You know, is this up candle, was that meaningful? And in my mind, I don't look at an up candle and just get concerned about the fact that it's not going in the direction that I want. I ask myself, well, what does it mean in relation to the zone from which we bought puts in the IEF? And many of you are in ZED, the futures contract as well. Oh, by the way, everyone, heads up. We'll talk about this more in the sector room, but I want to make sure everyone knows it. We have expiration date in futures contracts, the indices, but we also have the roll date, right? I used to call it the pit date because I didn't know it had a name. What it means is the pits are moving from, back in the day when pits were more influential, it means the pits are moving from the current front month contract to the next. And in the case of the indices, it's moving from June to September. So the M contract to the U contract. So just a quick heads up. So is it okay to re-enter? I need another setup. Yeah, I need another setup. We need another level. We need a volume ledge, a Darvis. We need some new fresh setup. So not yet, but we'll definitely talk about it today in the sector room. You bet. All right, next up, what are my thoughts on Boeing and Uber? Okay, Boeing, short the rip. Yeah, short the rip. That's pretty easy. That's an easy call there. And Uber is pretty much the same, short the rip. Even with, look, we think about what happened in May and just how much strength there was as both bond traders and stock traders tried to front run, almost force the Federal Reserve's hand, front run some sort of shift in monetary policy messaging or action. No, that's bonds have clearly said, whoops, yeah, not so much. Equities are still on the fence. I guess equity hopium is far stronger than bond hopium. That being said, these two really didn't benefit that much, Boeing or Uber, right? So aren't they then, in that respect, sort of relative outperformers to the downside? And yes, you can have the best of the uptrends and you can have the best of the downtrends. And I would say, Robert, if you're looking for short the rip opportunities, be aware again, we're rolling into earnings season again. Be aware of where we are on that 642 window to earnings. And by the way, Trish has written up over at the countdowntrader.com. For those who don't know Trish, my right hand here in the office, she's written up a really great explainer on the way that I look at earnings and the setup, not how we play the actual volatility, which I do not do, because generally speaking, I don't hate my money. But there is clarity going into earnings, just as we talked about, there's clarity going into a split. But after the split, during the split, the psychology is done. And earnings are not that dissimilar. So check that out, gang, because we're going right back into that season. But I like these as short the rips, Robert. Good eye. Good stuff. GLD, Mark. So we'll start with the gold futures and head on over to GLD. Kind of irritating. I will say it's irritating, mostly bearish, just won't follow through. Boredom and frustration are part of trading. Patience, therefore, is the antidote to that boredom and frustration. And as long as we are not in any kind of proximity to the expiration of our GLD puts, as long as we're not having the time or theta decay, as long as that theta decay monster is not in our rearview mirror, we'll just give the path of least resistance an opportunity to gain some traction. It hasn't yet, no doubt. But if I look at what this chart is telling me and the way that we're positioned, I'm still content with a play on a bullish play on real yields, that the real yields will continue higher as the central bank rates and bond yields continue higher. And that should pull real yields higher, and that should push, or at least keep the pressure on gold. And that's what I'm thinking with gold. And that's frankly how I'm positioned. Next up, IB asked, Raghee, will I be going over CPI data Friday like I did non-farm payroll? Yeah. IB, I'll tell you all straight up. Volatility events are not for everybody. So I think I mentioned that a lot before the non-farm payroll trading. But I think there's a lot of value in watching a trader who's traded hundreds of these events, high heat, high impact, high psychological impact, high volatility impact, hot zones. And non-farm payrolls about as hot as they get. Yeah. CPI is going to be up there too. And what I wanted to do, for better or for worse, we never know how the trades are going to pan out, but I wanted to have and give everyone sort of a preview of what I'm doing in my day trading and how I'm doing it and the tools that I'm using. And I thought, what a cool way for me to sort of say, hey, proof's in the pudding, or pudding's the proof. I don't even know what that means. What does that mean? What does that actually mean? I know the proof's in the moonshine. Lots of proof there. But I wanted to say, hey, we don't know what's going to happen. I'm not going to show you after the fact. Let's tune in live and see how this happens. And before I went live, I was chatting with the Lorna bot. A lot of you know Lorna as well. And I said, Lorna, this could either be a crash and burn, and everybody gets to see live, intense risk management technique, or this is going to showcase really how effective understanding time, that day trading clock, and volatility zones, as I've mapped them on my screen for many, many years, how they work. And yeah, let's do it again on Friday, right? So that's the plan. And on the 16th, yeah, we're going to have a webinar at 8 o'clock, but why not check out what I'm doing with these live trades? And it's going to put what I'm going to talk about on the 16th, 8 p.m. next Thursday. Again, it's right around the corner. Really looking forward to it. It's going to put into context what I'm going to show you all, because at this point, we will have had at least two, maybe three, if there's another good hot zone before the webinar where you watch me trade this stuff live. And y'all, if you watched non-farm payroll last Friday, we had a killer short fade. It took us 5 minutes before the release to set up. So this is not something that's going to take a lot of time, because we're mapping out on the screen historical expectations, historical tendencies. So yeah, let's see how this Friday goes. And then next Thursday, you can say, all right, I'll watch Raghee do this live, not just explaining how we can use this information after the fact. So yeah, I thought it would be a cool thing to do. I appreciate that, IB. Yeah, I am planning on doing that Friday, 8:30, right here at the Simpler Trading YouTube channel. So there'll be a separate live stream for that on Friday. We'll probably start like we did for non-farm payroll about 8:25. Okay. All right, cool. And thank you. William, what is your outlook for MNRL? That symbol sounds vaguely familiar. Up. I mean, really, very nice uptrend, William. I mean, look, this is pulling on a full-on Superman up and away. It's gone parabolic, right? And so this is tricky. We want to look for pullbacks, but I'm not holding my breath for it to come back down to the Darvis sub 30. And so this is where one of the techniques I teach is wait for maybe an 8 if the propulsion dots light up, Darvis if it appears, or a process of simple arithmetic called a 4-day average, 4-day box. And that could give us a more aggro level where we would need just a shallower pullback to take advantage of support that we can buy. And if there's support, gang, if we can find a level that we can say, look, this is a level, it's a line in the sand, I expect this floor to hold, there's two things that provides us, intraday or end of day, right? One, it's going to provide us with a specific zone for entry, and it's going to give us a specific level or zone for validity. One is about getting in, the other use is getting out. So if we don't know what our points of validity for our setups are, and that's one of the things I love about the HPMR ranges that y'all are going to see me use on Friday, that gives me both. I've got a range I can engage the market in, and I've got a level to understand the point of validity where that setup is no longer valid. So I do want to grab this question from Arthur here, DVN. I do like DVN a lot. Arthur, one of one of the best looking corners of the market, and has been for some time because of RBOB gas and natural gas, is XOP and DVN, which is part of OIH, which is part of XLE, which is part of XOP. So that whole narrative looks great. Now, I will say in the mastery, we've been jumping on that CTRA. We did that twice in May, but I definitely like Arthur. Yep, keep DVN on the radar. Awesome. All right, gang, I gotta go. I got my Sector Secrets Mastery weekly live trading and Q&A starting up about a minute ago. All right. But thank you as always, gang, for coming in to caffeinate and dominate, bringing your great questions. I do appreciate it. Great way to start the morning. Y'all are better than caffeine. I will see you all tomorrow, same time, same station. Pencil in, gang, 8:30 a.m. Eastern. This Friday, we'll walk you through the day trade. And then next Wednesday, put that one in pen, 8 p.m. Eastern. We're going to talk about how I'm day trading this market and why. Indicators we're using, but why do we want to have this gear to shift into? All right, gang, be good to each other. I'll talk with you soon.